Hello again, and welcome to our look at the upcoming October 8th trading session. As you can see, I have the economic calendar in front of you as per usual. You can see that there is the house price index coming out of Great Britain, anticipated to be 9.6%. Could possibly move the FTSE, but truthfully, I do not think that it is going to be a major event. Looking through the rest of the day, we have a lot of low-level events going forward. That is until we get down to the American session later in the day, where we have the FOMC meeting minutes, and that can move the markets quite a bit. And the reason is that it gives us the possible direction of the Federal Reserve. We know that they are less and less accommodative. The question is how quickly is that going to be? This will have an effect on the US dollar and the stock markets. The quicker that it appears to be likely that we will see interest rate hikes, or at least an end to quantitative easing, the stronger it'll be for the US dollar. Could weigh on the stock markets a little bit in that case, but ultimately the stock markets seem to be in an uptrend regardless. After that, we have the Australian employment change, anticipated to come out at losing 30,000 jobs. That, of course, will have a massive effect on the Australian dollar. Looking at the FTSE, you can see we have fallen. Those home price, those home index numbers could give us a little bit of a boost. 6,500 as expected, acted as support. We think there's support all the way down to 6,400, so we're really looking for a supportive candle in order to start buying the FTSE going forward via calls. Have no interest in buying puts until we get below 6,400. The S&P 500 started out the day rather soft again during the session on Tuesday, but you can see the trend line is still holding. We are starting to see a little bit of buying pressure later in the session. Likely that the Fed minutes will dictate the next directional move. At this point in time, you have to favor the upside overall, though, because that, of course, is the trend. Even though we've had a pretty significant pullback, we have no interest in buying puts. We will buy calls on signs of support, though. Over in the euro-dollar pair, you can see we tried to fall during the session on Tuesday, but actually found a bit of support at 126. A little bit of a surprise, really. Perhaps the euro is finally getting a bit of a reprieve. We still see 128 above as massively resistive. 129 or 127 isn't exactly free and clear either. So even though we have formed a hammer, we're not interested in buying calls. We're only interested in buying puts somewhere between here and 128 on signs of failure. And finally, looking at the silver markets, you can see we're forming a shooting star for the day. We tried to get to 1750, couldn't, and fell back down. Quite frankly, this is a market that's coming undone. Demand is low as the US dollar is higher, so there's a couple different reasons to think that silver will continue lower, and as a result, we buy puts every time it rallies on short-term charts. And quite frankly, I would not be surprised at all to see this market go down to the $15 handle. We see resistance in a major way at the $18 level. And with that, I've taken a look at the upcoming Wednesday, October 8th trading session.